talking about new technologies like Bitcoin. Now, Bitcoin isn't just a new technology. Bitcoin is a technological revolution. There's a difference. A new technology is something cool, and it's an improvement, and it extends markets. So like an iPhone was cool. We took a computer and a phone, we put them together. Now that's cool. And I love the iPhone, don't get me wrong. A technological revolution is different in a way that it changes the course of humanity and it drives financial markets. There's only been 5. I believe Bitcoin is the 6th technological revolution. They come about every 50 years. But whenever you're looking at new technologies, and especially technological revolutions, it's important to understand how to look at them properly. And one of the things that I mean by that is the wrong way to look at them is by looking at the price. The price is the least interesting thing and the least accurate thing to take a look at. So I like to use the story over and over. If you tune in every week, then I apologize if you heard this before, but I like to think about Uber. And Uber, was pitched in Silicon Valley a decade ago, and it was supposedly going to be this new way to get a ride, from your phone. And people are like, well, what do you mean? Like, can't I use my phone to call a taxi? Well, yeah, it's sort of like that, but there's this like cool app and whatever, right? But imagine so when you invest into what's called venture capital, venture deals, these are really early companies, they typically don't go public if they ever go at all, for about a decade. So that means for a decade, you had money if you would have invested into Uber, which, by the way, you would have done really well if you would have done that. There's been a lot of other losers. But if you would have invested into Uber in the early days, you would have had to wait about a decade for it to go public and have a daily stock price where you could get your money out of it. So during that decade, how would you know if it's doing any good? Because it doesn't have a daily price. It's not publicly listed. So looking at the price is not something you can do. And even if you could, it would be the wrong thing to look at. And the reason why is when it's so small and so new, it'd be extremely volatile. And you'd be shaken out all the time. Imagine with Uber where it's like, hey, we moved into San Francisco, hooray, and the price goes up. And then, New York cab drivers are protesting against Uber, and then the price goes down. And every time good news or bad news comes out, it goes up and down, up and down, up and down. And it would drive you crazy. But that's exactly what's happened with Bitcoin. Bitcoin has been a live price since day one. So if you can't look at the price, or you shouldn't look at the price, what should you be looking at? Well, you want to look at 2 things. One is the network growth, the growth of the network, Metcalfe's law. Is the network expanding? Are more people using it? Are the number of wallets going up? Are the addresses going up? Are the miners, the amount of computers that are mining on the network, which equals hash power, the combined power of those computers is hash power, is that going up? Is the network growing? Is the network becoming stronger? And then we want to look at the development on the network. So think about back to the Uber example. Is the Uber network growing? Are there more people signing up to give rides? Right? Like, what good is Uber if there's no one that will give you a ride? So you need to have all the cities, and you need to have as many drivers as you can in all the cities, right? So the more cities and the more drivers you have, the better. But you also need riders. So are the riders going up? So is the network growing? And so we would say that with Bitcoin it is, right? We can see that through the growth of the miners, the growth of the Bitcoin wallets. We can see how many wallets are being added to the system. And the other thing with Uber is you'd look at the development on the network. Is it developing? Have they added new types of cars? Now they have rideshare. Now they have vans. Now they do Uber Eats, right? And so they're developing on the network. They're improving the product, and the network is growing. Now, it's important to understand with a network effects are very, very powerful. So a lot of people say, well, why can't you just copy Bitcoin? Well, you can. You can totally copy Bitcoin, but you can't copy the network, right? So I could probably have someone make me a copy of Facebook, and I can call it Mark's book, but it doesn't mean anybody would use it, right? So I can make a copy of Bitcoin, but it doesn't mean anybody would use it. More importantly, it doesn't mean anybody would come mine on it. Would all the miners that have spent hundreds of billions of dollars to mine Bitcoin to help secure the network, would they all just come start mining Mark's coin? They'd give all that up? Most likely not. What about all the development that's happened on that, all the services that have been built? So the Bitcoin Lightning, Layer 2, and all the different wallets and all the apps and all of that, would they all just come onto Mark's coin? Probably not. So while I can copy the idea, I could copy maybe even the technology, I can't copy the network. Now, Michael Saylor wrote a book a long time ago, and he was talking about network effects. And I believe he said like any company that's achieved over like $100 billion valuation, the network effects are too strong for it to be overcome. And you don't really see companies lose once they've built that network up. And so, again, think Facebook today. Now, eventually, maybe people will stop using it, but but there's no way like another social media app would come and replace that. Amazon, right? These have big network effects. Again, I can go make a new site where you can buy and sell products, but doesn't mean that network will come over. So we want to look at those things. And I saw this week something that we've seen over and over and over is we're seeing mind share. Some of the smartest people in the world are leaving their very high positions to come work in this space. And so I know right now we're in a bear market. The price of Bitcoin and cryptocurrencies are way down, and Bitcoin is dead again, right? It's been dead, I think, 13 or 14 times. Every time the price drops, it's dead. Never mind that it's fallen all the way down to its previous high position it was at before. So again, looking at the wrong thing. But if Bitcoin is dead, then why are some of the smartest people in the biggest positions of the world coming over to work on it? And so we saw this week a news story came out. It says 3 executives leave JP Morgan this week to join crypto firms. So JP Morgan, one of the biggest and most connected banks in the world in the United States, Jamie Dimon and JP Morgan. Jamie Dimon had once said, Bitcoin is a scam. If anybody at JP Morgan traded it, I would fire them. But of course, now JP Morgan's moved into the space. But 3 executives at one of the most connected banks in the world have left to go join crypto. Now, a lot of people said, well, it's never going to work because, the government's going to make it illegal and all these things, right? Well, these executives are, they know a couple things. And they would probably not agree because they've left their high-powered jobs in traditional finance to go work for this new company. Let's take a look at that. So we can see here a banner week for people departing megabank JP Morgan to join the cryptocurrency industry. 3 executives taking the plunge despite a looming crypto winter. So even though the price is down, even though it's dead, again, even though it's never going to work, they've decided to leave JP Morgan to go join the crypto industry in the winter, no less. Now, someone who's been through a few bear markets, let me just say that bear markets are the time to build. That's the time to get ahead. We can see the latest leavers include Eric Raggi, a former managing director at JP Morgan with 21 years tenure at the bank. Look, he wasn't just a guy who had been there for a few months. He had 21 years tenure at the bank. He left to go work head of business development and capital markets at a company. We have Pooja Samuel, formerly a head of ideation and digitization at JP Morgan based in New York City, joins the Digital Currency Group. Digital Currency Group runs the news site CoinDesk. They run the event called Consensus. They have the big Grayscale Trust, Bitcoin Trust. So he left to go work there. And we have JP Morgan banker Samir Shah left the bank to become chief operating officer at an investment firm called Pantera Capital. So look, these people don't think crypto is dead. You might. But I would just stop and ask myself, am I more connected than this guy that worked at JP Morgan for 21 years? I'm not. I don't know anybody at Wall Street or inside JP Morgan. Am I smarter than them? I probably know different things than they know, but you might want to stop and think when you see this amount of mindshare leaving traditional finance to go work in this industry, especially in a bear market, and that should give you hope. I think if you zoom out and you can have the right time perspective, these things can help you a lot. I still believe it's the greatest opportunity that we'll ever see in our lifetime.